12 years, the toughest market I think I've seen since I've been here. And insurance companies are smart. And there's a reason why they're billion-dollar operations, and they've got the huge lobbying firms, and they're not going to be stagnant, and they're not going to lose money, folks. They're going to find a way to win.
How many of you have seen a smaller deductible on your recent claims? And this was 12 business owners, and all of them looked at me and said, Chris, they don't exist anymore. We need bigger claims.
How are you going to view AI affecting service industries and companies moving forward?
We are at the front end of what AI will become in business. I really do believe that the majority of tradespeople are not looking at AI as a solution yet.
It's a lot of what has worked in the past. What got you here won't get you there type stuff. How do you help successful people consider change and start to put that process in place?
Big thing with my most successful clients is
Hey, welcome everybody to the next episode of Violand Management's GPS podcast, Growing Professional Skills, where we have conversations with, most of the time, it's going to be with business owners, key decision makers, thought leaders within the trade, specifically whether it's restoration or plumbing or HVAC, along those lines, talking about the high highs and the low lows and what it's taken to build themselves, build their team, build their business, and build the industry. But every once in a while, we do take a break and bring it in-house and have conversations with our own business consultants. And the first one that we wanted to have that conversation with today is my good friend, Mr. Chris McQueen, who's been a business development advisor here at VMA now for, I don't know, what do we say, 5 years?
5.5 years, yeah.
Way to get the half in there, buddy. That's very specific. So we got 5.5 years of Chris being here at Violand Management.
Thank you, Jeff. I really appreciate it. Looking forward to the topics today.
Absolutely. So let's begin by telling us about Chris McQueen. Where'd you come from, and what was your experiences in life, and how'd you end up here?
Yeah, I've had a really great upbringing with my family, and they taught me everything they knew about being entrepreneurs. My mom's a hairdresser before she was a hairstylist.
I see she's done a wonder on what you've got going on there. So
we started this very young.
Yeah, she's very good.
My dad is a master craftsman, so I grew up in cabinet shops and going out to Four Seasons to do work with him at night, as far as I could make it, right? 1 o'clock, 2 o'clock came and I'm out. But he'd stay up and finish out the job for the night. But he'd do hand-bent stair rails, cold leaf finishes, really, really nice work that, frankly, I didn't have the patience for. And he told me that about 3 years ago, that he knew I was never going to learn that. So it was a real treat for me to live with that most of my life.
Good. I like that. I like him being direct.
Yeah. So I came up with entrepreneurial parents. And then when I was in my 20s, I had a friend that went down and worked Hurricane Katrina, and he made a bunch of money. And so in your 20s, what sounds good? A bunch of money.
A bunch of money sounds pretty good when I'm in my 40s, to be honest.
Yeah, well. So I left family business, and we were nice, big, slow, right? We had designers we worked with 4 or 5 projects a year. Coming into insurance, this is not that. And learning how to do a volume business, work with insurance adjusters, figure out insurance policy, figure out how people interact with each other on this side of things. Big learning experience. I was able to work inside for a long time with insurance and enjoyed it. Then I went to the dark side. And worked for, at the time, the world's largest TPA, Contractor Connection.
And you've been severely flogged several times since?
Did daily,
Nice.
daily floggings. But I learned how the industry worked a little bit better, about how the insurance company was pushing on contractors and what that looked like. And the thought process, really the basis of TPAs is, hey, do you think we could get them to do just a little bit more? And that's the trap that we've fallen in with managed programs, is can we get them to do a little bit more? And eventually it becomes a little lopsided. So I learned from that experience. I started asking questions. I read a great book by a guy named Paul Downs. And he was figuring out how to survive his small business. And he was a cabinet maker. So it spoke to me, growing up in cabinet shops. So I started asking questions. And did I know what I was talking about at the time? No. But I started asking questions about, hey, what's your burn rate? What does it look like for your payroll? How are you keeping employees? What kind of culture initiatives do you have? And frankly, I was told that was not my job. So I started looking for a new one. And that's when I found Chuck and Tim and VMA. And I've been here for that 5.5 years since.
So I want to tell the audience the story of how you and I first met. Again, we're going back here 5.5 years, and I didn't know that we were hiring another consultant at that time. I was not involved, and usually not overly involved in the hiring practices when it comes to the advisors. But this time I was not involved at all, as far as to not even be said, hey, we're going to hire one. And so I go to a show. It was Access, Nexus, Alacrity, down in Orlando 5.5, 6 years ago. And it's myself, Chuck Violand, and Scott Tackett go down to work the show. And I'm standing in line at the registration desk with Chuck. And I just happened to turn around, and there is this giant-headed, goofy-looking dude about 15 feet behind me wearing a white Violand polo head, just big smile, just waving like this. And I'm like, what the hell is that? So I'm looking at it, and I turn around, and I'm thinking to myself, holy cow, do we have groupies or something? And I let a couple seconds go by, and I thought, no, that can't be right. I must have misread the logo. He's probably waving at somebody else in line. I turn around, look again, and there he is. Huge head, big smile, waving. Like, all right, this is weird. I lean over to Chuck, and I said, hey, I don't want to alarm you, but there's this weirdo wearing our logo standing right over here, just smiling, waving at us. Do you have any idea who he is? Chuck turns around, looks directly at you, turns around, looks directly back at me, straight-faced, and goes, I have no idea. Just let it go. Because you had never met Chuck either during the interview process. You're the first consultant that we had ever hired that Chuck was also not directly involved in the process. And it took him about 20 seconds. And then he goes, oh, yeah, we hired a guy. We should probably go over and meet him. And that was my first time ever meeting the great Chris McQueen. Yeah. And
It was a
now
good time. That was a heck of a day.
That was and then you and I ended up, I think we went to Charlie's Steakhouse or somewhere after that. We went and had a couple of drinks and got to know you and more about your background. And of course, been a great time ever since. But hey, let's dive into business here. And obviously, this is not a discussion about you. This is not a discussion about Violand management. This is a discussion about the industry and the businesses and the people involved and things that we need to pay attention to as we move through 2025. And I love this first discussion that you want to have, and it's going into how insurance companies are adapting. This is a tough market. This is one of the 12 years, the toughest market I think I've seen since I've been here. And insurance companies are smart. And there's a reason why they're billion-dollar operations, and they've got the huge lobbying firms, and they're not going to be stagnant, and they're not going to lose money, folks. They're going to find a way to win. So let's get into how insurance companies are adapting. And how is this affecting your business? You've got a great term for it. You're calling it shrinkflation, specifically shrinkflation in the insurance market. Can you expand on that?
Yeah. So shrinkflation isn't a new term. It's used across industries. And I looked up some statistics and started thinking about, okay, what's the thing that impacts us most? What's our daily spend on? And when we go to the grocery store, we see shrinkflation. The information I looked up says that Frosted Flakes, your family-size Frosted Flakes that you have to buy for your minions that you have at home, it is 40% more per ounce than it was in 2020. So the cost of that goes so basically they didn't change the price of it. All they did was take it from 24 ounces to 21.7 ounces. And so you paid the same price, which elevated your cost for less material. Same thing happens with snacks and candy bars and all the things that you buy for your household. It's happening in the insurance market. So the first thing that we've seen is that our premiums have gone up. And so premiums have gone up, but it's still the same amount of policy. It still covers the same amount of house. Then we've also seen that deductibles have gone up, where our industry average, which somewhere between $4,500 and $6,500 per mitigation job, that's being absorbed mostly by deductible now. And so the insurance company is shifting the cost of repairing homes from themselves to the homeowners. And so many of our clients in those normal sized water mitigation losses have become cash customers. They're no longer going to their insurance and saying, I need help. They're saying, I need help and I need a provider that can do it. And so this endless line of claims that we've had come from the insurance company now for years, it's starting to get shorter because they've shrunk the amount of product that you get, and the small wins that we would get out of small losses are starting to not exist. I don't know that I've seen a deductible less than $3,000 with my clients in the last stretch. And in fact, I was with a group just last week and I said, hey guys, how many of you have seen a smaller deductible on your recent claims? And this was 12 business owners, and all of them looked at me and said, Chris, they don't exist anymore. We need bigger claims. And so it's changing where insurance restoration contractors are going now to get their work, because the small claims are less viable. You have to find the right customer that can afford your services to be able to pay out of pocket for them.
You feel that because now we're getting into larger size homes and maybe we're getting into more expensive homes and that does that have a bigger effect on the mom and pop restoration business or the smaller restoration business that hasn't been able to define the client or elevate the client? Or is that affecting everybody across the board?
I think it affects everyone across the board, right? When I look at numbers, I'm looking at average, right? So an average total insurance claim with mitigation and rebuild, somewhere between 12,000 and 15 grand, right? So your small ones, your big ones, they're all in there. And so when I'm looking at that and saying, okay, restorers are trying to do this, some of them without the rebuild sign. And I'm looking at it and saying, okay, well, what's the deductible? If we just take simply a $400,000 house, which for most of the country is a median home now, and we put in a 2% deductible, well, $12,000 claim, 8,000 of that is going to be your deductible. It doesn't make sense at that point to go out and get the 4,000 out of it. They're trying to value engineer their home to take care of their loss without affecting their future insurance rates.
So you're seeing that $3,000, $5,000, $8,000 loss is now not getting over to advanced restoration. It's staying within the home and it's going to the homeowner's nephew who's got a tool belt and a dream, and they're going to fix this thing.
And DIY options, people are going, you simply go to the big box stores, you can rent the equipment. It's expensive, but it's less expensive than having a professional do it. And will it be done right? There's a big difference between a professional restorer and someone coming out and trying to dry down their house.
If you get a phone call from somebody and you go out there and you just scan this thing real quick and hey, I'm going to punch this thing into Xactimate, it's going to be $5,000. I've done this a million times. This job ain't happening. Are you staying on that job site anymore? Or are you just telling them go to Home Depot?
Great question. I think for our folks that we work with, business owners that we work with, we have to figure out the product that person that frankly doesn't have $5,000 cash can pay for, and to be able to assist them with drying their home appropriately. I won't say properly, it feels like a strong term, but appropriately with the resources that they have. Quite simply, it's a matter of resources. The homeowners don't have the resources, most of them that we work with. And look, I have guys that work in nice areas. I have guys that work in distressed areas. Between the two of them, we're running out of people that have resources to take care of a $5,000 incident. And so we have to find something that is more appropriate for them.
So if my Snickers bar is now 12% smaller than it was 4 years ago, and in an insurance world, that means my deductible is eating up the cost of this job, and why am I going to turn this thing over when it's only going to cause my insurance to go up? The insurance is going to go up already. This is going to have a pretty negative effect across the board on guys who need these types of jobs, not just for the cash flow coming in, but to keep the crews busy, especially when times get a little bit slower. So if that's drying up, that's going away, I've got to become better at chasing the right types of jobs that I want. Absolutely. So where do you see some potential solutions that are going to organically alleviate that issue in my world and allow me to have a better use of my time?
Yeah, a couple of places that my clients are going right now. Honestly, I have a friend, not a client, a friend. He views their business as a residential fire mitigation company. and they're a big business.
Mm.
Quite frankly, they're looking for fire jobs over and over and over, and they've specialized in their market to where they're good at that. They have the personnel to do it. They also do the rebuild side. And so they've found a way to go after these larger jobs to where a $4,000 or $8,000 deductible doesn't matter as much. You can value engineer that out of the project. And we've done this for a long time, right? Homeowners take a portion of it and say they're going to complete some of the job so we can reduce the value of their deductible. Those are their dollars. We're going to let them play with that. I have other folks that are, and look, the commercial market has gotten increasingly competitive right now. The big players and private equity have frankly figured it out, and they have high-powered sales teams that are consistent with it, and they produce results on the commercial side. We can play that game as well as smaller restorers and independent restorers. We can go after those jobs, and I have guys that are having success with that. I have other folks that are looking towards ancillary services, whether that's dealing with soft goods. They're taking a bigger bite out of content and finding how to perform contents well. I have some folks that have decided that consumer is still king in this, which I agree with, and they're going after direct to consumer mold marketing, and they're getting good at selling customers on a loss and selling them on cash losses, which I think is part of the future. I think all of these pieces are big losses, are specialization or niche, and getting better at cash losses and how we pursue cash losses. I think those three, if we can make those pillars of how an individual company interacts, we have success with that.
Yes, these companies have got to pivot now in ways to find additional jobs that are out there, because a lot of what has worked in the past, what got you here won't get you there type stuff. So when you get into air ducts, you get into radon, you get into fire, you get into content, you get into all of these, where are you seeing the biggest success stories? And for somebody who would be thinking about expanding into these other industries, can you talk through what that process is like to make that decision? Because that's a significant investment, not just in time, but in your mental usage as well. And you're just going to draw things away from what you're already good at.
Yeah, absolutely. So the number one thing any owner can do, and look, Jeff, you know as well as I do, that owners really, really, for the most part, don't like delving into their sales and marketing, and they want to hire someone to do it. And we've done it for ages with the internet, and we've outsourced the internet to people that do a good job. We hire people to be route marketers for us, and we lightly manage them. So do they ever reach their full potential? I get into a lot of engagements where I'm talking to people about their sales and marketing team, and they have a marketer that's stuck. They understand the mechanics of it. They understand how to get there, but they haven't been coached well. And so the restorers that are spending time getting out of operations, right? Because we've made the operational improvements that we can for the most part, right? We're all competing. Look, how many conversations are you having in a week to where you hear the same way everyone is competing across same customers? They're not really different.
100%. And to make it worse, they all see commercial as the way out. Well, we want to go after commercial work. We want to go after commercial work. Well, of course you do. But explain how that happens.
And so I'm looking at folks and saying, fall in love with your sales and marketing. Spend the time to understand it, nurture it, go out with your reps, find out who they're talking to. And look, one of the big things, I learned this from John Monroe. If you're not getting in the truck and riding along with your salesperson at minimum once a month to see what they're doing and hear what they're talking about to your customers, that's a failure of management. The biggest thing you can do is fall in love with sales and marketing, get in the truck, see what your people are doing, look at it and go, it's not quite how I would do that. Coach them, give them instruction to where you'd like to see them spend their time and efforts to build the business that you want. Now, if that's commercial, great. Go after the commercial business. If you're in a unique market like Florida, go after homeowners and go after cash sales down there because it's a different market. Some people have made the decision to work with TPAs, which there's some places that strategy works. Is it one that I love? Having been on the inside? No. And I don't appreciate it as much, but I would love to see our owners fall in love with their sales and marketing. Spend some time, even if it's my most effective owners, spend probably a half day a week being a marketer themselves, if not 2 or 3 half days.
Can I jump in there for a sec? Because my first boss out of college was John Monroe. And we were not in the disaster restoration industry. We were in the floor covering industry, and John was the district manager. I was a territory rep. So John did, for years, he did ride-alongs with me. Once a month, he was in the car with me, and we'd go out and view the customer. So let me give you some advice from the salesperson's point of view of what those ride-alongs truly should be and feel like. Number one, when you walk into an actual decision maker customer's office, the owner cannot talk. The owner cannot be actively involved in that conversation unless something is really red flag or amiss, because the decision maker is going to go directly to you, to the owner, not through the salesperson. And you're not going to get the feedback, the insight that you think that you're going to get, because they want to talk to you because you're the decision maker. Your job when you first go into those calls is to tell them, I'm here to observe. I want to learn more about yourself and the issues that you're having so I can address that within my entire organization. I just also want to see how my sales rep is doing and get a better feel for what his or her day is like. And you step back and you close the mouth and let the sales rep do the job. And I can promise you they're going to be intimidated enough because you're standing in that room. So any oxygen that you use up is only going to be a negative. We coach when we get back to the car. We coach when we get back. And I actually would tell you to coach when you get back to the office, not when you get in the car, because when you are in the car, I still don't want you as the owner talking a ton. I want you seeing what types of questions your salesperson is asking you, because they need to learn from you at all times, and they don't get a half a day with you. They get 10 minutes in the morning that they're going to waste your time talking about last night's game. Force them to ask you questions, and that's going to be the best use of your time. Then we coach when we get back to the office about what we saw and felt, and also take what you heard from the people that are out there and file that away, make notes, because if that salesperson walks out the door tomorrow, that information needs to stay with you. So absolutely, I love the as a salesperson, I think the salespeople are by far the smartest, most handsome, most wonderful people in your organization, and they should all get raises. At Tim Hall, we should all get raises, and we should treat them all much, much nicer. But it is a driving force of the organization. Without sales, nothing else happens. Obviously, without operations, you can say the same, and everything through the line, admin and HR and accounting, but it's a vital piece. The Contractor's Choice Awards were established to highlight innovations in products, tools, and services provided to the restoration industry. The winning entries will be announced during the Restoration Industry Awards session on Tuesday, April 29th at 3:15 p.m. 2 awards will be presented based on the nominees that receive the most votes in each category: Best Category, Products and Tools, and Best Service and Support. Voting is open until March 14th, so cast your vote today. So sales has got to become more equipped at finding the right types of customers, is what you're saying, and the right types of businesses.
Absolutely. And we're hearing it from our customers every day. And most of the time it's missed because there's a disconnect between the people we paid to do the marketing and sales for us and the ideas that we're forming and strategy that we're forming in for each business owner. And we need those two to join together. There's a great book. It's by an author named Edinger. I had a great restorer in the Northwest recommend it to me. It's called The Growth Leader. Okay. And it's about the intersection of strategy and sales and how to become a better leader in your sales department.
I should probably read that one. I will write that down. So a lot of companies that are out there in restoration, the margins are strong in this business. If you do a halfway decent job, you should have a profitable company. You should be able to not just buy yourself a job, but earn a respectable living for the very hard work that you and your team put in, which means you don't have to be exceptional at everything to be successful. You can get to a successful rate by doing things a certain way. But if you want to get to the next level, you've got to improve your abilities, your actions. So if you're getting squeezed by these insurance companies and the market is changing and then we're in the middle of this shrinkflation cycle that you're talking through, we've got to get successful people to change. And that's a really, really difficult thing to do. You know, you got to let go of that trapeze and fly in the air with no support for a little while until we can grab a hold of the next one. What suggestions or what strategies are you using with clients who are successful, who are smart? Our clients are. How do you help successful people consider change and start to put that process in place?
Yeah. Jeff, I started my journey with owners on this probably fourth quarter of last year. There were some nudges and pieces. Look, we're coming out of the pandemic and everything changed 4 years ago. And so now we wanted to see if it would go back to where it was before. And with the recent changes to the insurance market, I think the insurance companies have decided it's not going back to where it was before.
No, no, I think they've found a way to get a little bit of an advantage, and they're gonna ride this as long as they can.
So right now is the restoration space. It is everything that our owners are doing to have a successful business. Are they having success with it still? Absolutely. But we're eating at the edges, right? The pieces that were abundant before, where we could go out and throw a rock and say, yeah, I got a job, and deductibles $1,800. Not as easy anymore. We're looking for those people still with $1,800 deductibles that we can perform work for, but there's fewer of them, and there are going to continue to be fewer and fewer. So strategy for folks right now, whatever strategy you've decided on for 2025, and please, if you have not planned your 2025 strategy, and if you're listening to this in the future and it's 2026, please take the time to plan. One of the most valuable things that you can do is plan how you want to pursue your business, how you want to sell your business, and discover what you want to do to achieve those actions. Mm-hmm. So the strategy that we have for this year, I think, is still good. We're eating the edges of it though, and we're eating the crumbs of the insurance industry at the moment. For 2026 and beyond, or those that are very adventurous and want to be at the front of the curve, I'm looking at different tools and methods to discover, hey, how is my business doing compared to my competitors, and what can I do to change that? Great example, and I think you're aware, we just did a presentation on what's called a strategy canvas. It's from a book called Blue Ocean Strategies. And that canvas talks about how businesses change over time and what you can do about it. We've looked at how the automakers have changed over time. Did you know that the number 5 car sold in the US after Dodge Ram, after an F-150, after a Silverado, and after a RAV4, the 5th most popular car is a Tesla?
I'm seeing them everywhere anymore. And I don't live in California. I'm not in the Pacific Northwest. I'm in the Midwest. We still eat a lot of deli meat and stuff and pierogies here. I'm seeing Tesla Cybertrucks everywhere.
I think Cybertruck's the worst truck in the world. That's another discussion though. It's ugly. So, but number 5 car is a Tesla. Mm-hmm. Where were Teslas 10 years ago? Mm-hmm. Not as many as we have now, right? And so in this presentation, we looked at, okay, how did Tesla disrupt the luxury auto market? They created a story. They looked at their differentiators of how they sold their business, and they created a story that made it to where people said, you know what? I have to have one of those. That is the next car. Maybe it's the auto driving features for those of you that don't like putting your hands on the steering wheel. Maybe it's the charging infrastructure that's out there. Maybe it's that it is an EV, and whatever your beliefs are, you think that's better for you. And so in our restoration business, we have to look at how we've competed traditionally. And the basis of how we compete is time, quality, and price. We have to start looking, the 3 key ones, right? We have to start looking beyond those constraints and saying, okay, how else can we compete? And where do we want to excel as restorers? And each business has its own strengths. Where do we want to excel as restorers and outperform the marketplace so we win those jobs that are on the edges right now? And then we also have to look at a second piece here and say, how am I going to compete for cash jobs? If I'm going to stay and play in the small arena of homeowners that are having higher deductibles, less frequent losses, what are the other things I'm going to do to get in their homes, to be able to talk to them on a regular basis about the risk in their home? And do I have a solution for that yet? No, I don't have a key solid solution and some silver bullet to say, hey, everybody pursue this tomorrow and we win. But I think individual companies, and I won't go into their strategies because they're theirs. Individual companies are picking strategies where they can outperform their competition. They're putting a good story behind it, and they're able to tell that story succinctly to the people that are going to pay them dollars for that service.
Yeah, you mentioned you don't want to go into some of the specific strategies of your clients for confidentiality reasons, but I'm going to pull back the curtain when it comes to Violand management and this blue ocean strategy. We used it this year. It's our first year of using this, and obviously we helped thousands of restoration plumbing companies over the years with putting together their strategic plan, and we're still trying to figure out ways where we can always improve it ourselves internally before we can bring it to the market. So we brought in pieces of the blue ocean strategy this year as a leadership team. And I'll tell you where we spent the most amount of our time when we did it wasn't on what else can we do better and do more. A lot of it is, what are we doing right now that doesn't actually provide any real value that people are willing to pay for, that is costing us money? And that was a difficult conversation because a lot of the stuff that we had to sit and discuss were things that we had a lot of ego attached to, a lot of pride.
You're proud of.
We built this thing. We sunk money behind it. We put blood, sweat, and tears into this. And it ain't as good as we needed it to be because it's not being utilized. And so to sit down and be willing to be open and have that conversation and say, yeah, we missed you. But the amount of money we realized we can internally save by stop doing things that nobody was really using or willing to pay for was a significant increase in cash flow as compared to trying to spend additional dollars to chase something else to hope that it would work in return. So have you had those types of conversations with clients where you look at them and say, you know what, we really got to dive into your numbers with reconstruction, or we've got to dive into your numbers with this thing that you're doing over here because I think you're hemorrhaging cash at it? And what kind of feedback do you get from them when you do that?
Yeah. Jeff, you're hitting on something that's a process for most owners, right? It's something you're proud of that you've done. And you may have done it the first time and you said, by golly, I made a ton of money doing that.
Yes.
I made dollars at the end of that. And over time, those dollars have eroded, right? And you start looking at it and you start having that critical eye of it and you go, man, I didn't make 20% on that anymore. I didn't make 25% on that. Instead, I'm making 12% or 11%. And when we start having those conversations, it's hard for people. Heck, it's hard for us at VMA to let go of things. And we have this sunk cost fallacy that we've already put all these dollars in. If I put another X amount of dollars in it, do I get to the goal?
Yeah.
And we have to accept that maybe we were wrong.
Yeah. It seems that it's easier to throw good money after bad. That we're just wired to say, you know what, I've made this decision and I'm going to stick with it no matter how bad that decision is or how out of date that decision is, which in our case, a lot of it was just out of date. And we throw a lot of money at things that we probably shouldn't have over the years. We're a pretty smart group and we continue to do this. It's crazy how much more difficult it is to let go of something that you're doing that doesn't make the difference anymore than it is to go chase the new thing sometimes, because chasing that new shiny object is a lot more fun.
Yeah.
You get to be the hero when you chase the new shiny object. You got to admit defeat when you shut the other one down.
Yeah, absolutely. And so the process for owners is really getting to know your data and looking at that data, shining the light on the data, saying, hey, this is how we perform. And the environment that we're in now, sometimes it's a week to week looking at the data or month to month looking at the data and saying this line of business or this thing that we're doing, it cost us this week and next week and the week after and the week after. Or it didn't produce the results that it initially did. And now we're having diminishing returns through that. And so for an owner, it's about picking those 2 or 3 key indicators, those KPIs, if you will, and saying, this is what I'm going to watch for this line of business. And I know that my data is correct with that. And a lot of times when we work with owners, they don't know if their data is correct. Hey, it's just data in there. And so we spend the time.
My bookkeeper or accountant is telling me.
Yeah. So we spend the time to actually look at it and look at it job by job, dig into the details in it. And it's painful. It's hard. And when I come back to an owner week after week and say, hey, tell me how your job went this week. And they go, well, Chris, this one went okay. Well, what are your numbers behind it? Well, I haven't figured that out yet. And so on top of all the other things you do to run a business, getting into these individual projects and looking at or individual lines of business for people that are running multiple locations or multi-million-dollar locations digging into those details, it's hard.
Yeah.
And
So
we don't trust the data.
yeah. A lot of times you're looking at them and going, all right, we all got to pull our pants down and ask each other what we think. And that's tough to do. But I think also with that, and you're coming at it from an owner's perspective because you spend a lot of time working with owners. And I would push back and say there's a lot of that needs to come from the employee piece. The employee needs to be empowered and confident enough to go to the owner and say, hey, I don't think we need to continue to do this. There's a better way to do this, because I can guarantee you in every business we work with, there are ideas that the technicians have that never make it to the owner that would be game changers, but they don't have that confidence or that path of communication to get there because they're the ones with boots in the ground. The key decision makers, the technicians, the owner's responsibility is to tell them, you have this power, and it is my expectation that you utilize it. You come to me when we're doing something incorrect, and let's talk through better ways to do it and be open to have that conversation. Be open to pulling the pants down and saying, what do you think? And that's another piece of coming back to the ego of the owner. What do you see in your most successful clients? Do they have that type of communication?
Yeah. So the big thing with my most successful clients is that their employees know how to win. They know those numbers. So if we're looking at rebuild, for instance, and saying, hey, on our rebuild side, we need to drill down to our costs and know every job intimately. Mm-hmm. Those project managers have a responsibility. And so my owners often say, well, Chris, if I'm getting all of this data, well, are your PMs gathering this already? Are they job costing this? Are they looking through it and saying every dime is accounted for? If not, let's go back and train. We may have taught them how to do it, but we didn't go through the time and expense and go through training with them to get them into a routine or habit. Simply, there's 22 working days in a month. So for every employee that you have, if you want them in a new routine or habit, it's 6 weeks. So you have to hold their hand during that training time and say, this is what I expect. Here are the numbers that I expect to be reported back to me. I need you to make sure it's right because I'm making decisions about your work life and how you win as an employee based on the numbers that you're giving me.
Yeah, great advice. So let's pivot here. We've talked a little bit about change and putting change into the businesses, and we've also talked about how the jobs themselves are changing and the types of jobs and size of jobs that we want to target that's out there. So let's take those two conversations and kind of mush them together. You've talked about the book, Who Moved My Cheese? And in my opinion, there's a couple books that you need to reread every once in a while because even though the words don't change, the way you interpret the words on the page absolutely do. 7 Habits from Stephen Covey, Who Moved My Cheese, clearly the Bible. Your place in life changes, so your interpretation changes. So go reread that book if you've already read it. Read it for the first time if you haven't. It's a very quick read. But you've talked about Who Moved My Cheese involving the changing dynamics of where leads are coming from in the industry. Can you expand on what people are feeling with that?
Yeah. So just going further down kind of where we've been on our path in the book, Who Moved My Cheese, which by the way, gang, if you're not a big reader, you can go to YouTube and you can listen to it on time and a half and you'll be done with it in 45 minutes. It'll be painless. Listen to it on your drive. In the book, they talk about the pile of cheese. So these mice and found this massive pile of cheese and they sat there and they ate on it and they were happy. And eventually this pile of cheese shrunk. And so at some point, one of the mice said, I need to go find new cheese. And he left. And so he started looking for those other spaces to gain cheese or work. Where are the dollars coming from? Our job as business owners to figure out where the work and dollars are coming from and get in the way. At the end of the day, there's some availability to people becoming clients of ours. And we have to find those spaces where we can get in the way. So some restorers are going now. A big push in the industry is in the asbestos field. And there's some risks there, and we have to measure and monitor that and look at that. Others are going to, the established companies are working significantly on government contracts, either local municipals or federal government, which may change in the near future. We don't know. But there's viable business there. They need services. Others are going down that path and becoming subcontractors for what they title prime contractors in those, which is beneficial business, but it's all big, quick expansion business rather than that steady, stable. Where I'm looking for steady and stable are our commercial clients right now. And fact of the matter is that our commercial clients, they're having $50,000, $60,000, $70,000 deductibles on their commercial projects. So for us, what do we end up doing most? Well, these $2,000 to $10,000 small losses. We go into commercial bright-eyed and think, man, we're going to land the big one. It's going to happen. I'm going to put in the effort and the big one's coming.
I say that every time I'm fishing and I throw out another cast.
It's this next one. I'm just going to keep going.
One cast away.
But what I know from working with multiple companies and, franchises, independents, everybody across the board, most of the time with our commercial clients, what do we end up doing? We go clean up poo for $2,500. Right? It's not the big loss. You didn't catch on fire. Your place didn't burn down.
Right.
But you've got a poo problem. You know what? I can take care of that. I have resources to do that. You've got an odor problem. I can take care of that. Something is wet and you simply just want it to be dried in place. You don't have concerns about proper drying and the other pieces behind it. There's some sticky situations there. But as a company, you have to decide what you're going to do for that client and what you require of them to find those new areas where we can go, this is a new resource for us. I can consistently go back here. I can consistently get, even if it's a $3,000 job. We've become in love with, I need the big jobs. I need the big jobs to make it make sense. But as a restorer, if you can make a $3,000 job profitable and fit within what you do and do enough of them on volume, I think we can win there. And so I have restorers going to, in the insurance market there, I have a big group of restorers going towards air duct cleaning and doing that in larger facilities that need annual maintenance or every other year maintenance and getting on a maintenance program with them. Now, is the work sexy? No. Right? Cleaning each air handler one at a time for 9 or 10 of them over the course of 12 to 16 months. It's not sexy. Right. It's not that big win, but it's dollars and it's revenue. And it's what keeps the restorers going until they do get to that big win, until they get to the distribution center fire that is $8-9 million almost on cleaning. That's what keeps them going.
You're seeing these types of jobs coming in, these smaller commercial-based jobs that maybe the giant guys are not focusing on as much. You're seeing that as an opportunity then to go in and replace those $3,000, $5,000, $8,000 residential jobs that Mrs. Johnson simply can't afford to put through your business.
There's no money there.
Yeah.
So we have to find the clients that do have the money and do something that maybe we're not comfortable with at first. In fact, we may lose money on the first couple. In my opinion, it's a risk worth taking to find that next area where you're going to attract and retain clients.
In your opinion, that's the new cheese.
Yeah, absolutely. Smaller services that fit within our wheelhouse that can produce the larger services we're looking for.
Thank you for listening to Violand's GPS podcast. I hope you're finding valuable insights and practical wisdom to guide you on your journey. Violand's 2025 Restoration Project Management Program, offered exclusively from April 7th through the 12th in Canton, Ohio, has long been regarded as the benchmark for professional project management training. Together, Violand coaches, industry leaders, university-level corporate trainers, and subject matter experts deliver proven systems and best practices to skillfully oversee restoration losses in alignment with the science of project management, increase margins across all types of jobs, and manage higher workloads with superior customer service. Don't miss out. Register today at violand.com or use the links provided on the screen or in the description. Now, let's get back to our show. So we're going to pivot again here. You are somebody who is a techie guy. You listen to a lot of podcasts. You've got a great knowledge in upcoming trends and technology. So clearly you are passionate about AI. And I never had AI conversations 2 years ago. I don't go a day without having several AI conversations with clients, with prospects, with thought leaders. And it's rapidly changing. So you being a leader here at VMA in AI, you're starting to give presentations on AI and how it's going to affect it. Going out in the industry, I know you've got a couple coming up this year. How are you going to view AI affecting service industries and companies moving forward, both the industry and the company?
Yeah. So I think over the next year, we're going to continue to see this expansion. And honestly, Jeff, we are at the front end of what AI will become in business. And I really do believe that the majority of tradespeople are not looking at AI as a solution yet. And simply the things that we can do right now as tradespeople is prepare. Really that next step, and I'll take another piece here from one of our other consultants. Josh Bachman does a great job thinking about how data affects a business. And he really digs into hey, before we get to 1+1, what does one mean? What does plus mean? And what does the other one mean before we get to equals and then two? My mind doesn't think that way. And it's amazing that his does, because I really appreciate it. But the first thing to do in your business, if the data today is not where you want it to be, where you look at your job management system, and I don't care which one it is, and you go, it might be 80% right. Or it might, in most of the businesses I work with, it's 20 to 30% right in their job management. And the utilization of that, it doesn't make sense because they're not managing by the data yet. I think in the near future, we will have to manage by the data. And we're already starting to see our software providers out there look at the next step in what AI can do for us and for our industry. Currently, I know that there's several products out there, and I don't know all the final pieces of it, so I won't speak to it. I'm not knowledgeable enough on what they're actually building. But I know it's a topic in every one, and you may be able to speak to this, every one of our software providers that we work with, they're talking about AI today. And so it's coming. We need to get used to it. First thing that we do as tradespeople is start with your data management. Look at an individual piece of something that you put in your job management system and say, is it right? Do I have 100% confidence that it's right? And if not, start to change it so it is right. Yeah. Because in the future, your software is going to make decisions for you. You're going to set the parameters and you're going to tell it, just like our automatic driving cars. I don't know. Have you ever been out to Arizona and you've seen these cars out there that drive by themselves? You get in an Uber and it's actually
that
no
crap
driver.
freaks me out. Yeah. I'm not ready for the Jetsons yet.
So the Jetsons out in Arizona, you can hop in an Uber. If you tell Uber it's okay, I want to hop in a vehicle without a driver. It's a minivan. When it shows up, the side doors open. There's plexiglass between you and the front seats, and there is no driver.
Mm-hmm.
So, different experience. Jeff, I see you don't trust this right now.
I've watched the videos of the, what they call Waymos in San Francisco trying to park. I'm going to maybe continue to use a person for a while, but I know where you're going.
Yeah. So the Waymos, they know the layout of the streets. They know the rules. They can see the lights. They can follow instructions. And it's all something a programmer's put in and said, here's how you do this. Do I trust programmers? I don't know. The guy that's on his 12th cup of coffee, working 16 hours straight and then saying, yeah, this is the way that people are most safe. I don't know if I really trust that guy yet.
Right.
But we're getting to a point to where the computer is going to make a decision off of the data that's in it. So we're with restorers today and tradespeople today, make sure that your data is correct, because in the future, your computer is going to make decisions for you based on that data.
Yeah, what I would say with that is when you use AI to create an SOP, to help complete the data, to give you ways to use it, it's doing the best it can. But it's, like you said, it's data in, data out, or garbage in, garbage out. And so what it is a great starting point right now. You can use it to get years ahead in 30 seconds by asking it to do what you need it to do, but it doesn't guarantee it's going to give you the right answer. And from that point, that's why it's important to have a business coach or a mentor, a couple, peers in the industry that you lean on. Take that information, take that data, take that strategy, take that KPI, that SOP, and show it to them, or go to an RIA conference and show it to people and say, okay, here's what I've put together. What do you think? Where am I right? Where am I wrong? Because if you just start from step one, it's going to take a long time to get to the finished product. But AI can do step 1, 2, 3, and 4 really quick, and then go back to experts and people that you trust to get that final piece in play. You'll get a lot more done that way.
Yeah, and that's the next big piece, right? Large language models, whether it's Copilot or Gemini or ChatGPT. And I don't know who's going to win this race. I do know that the big companies are throwing piles of money at this to figure it out and make it better now. So my advice to restorers, aside from the data management, is start using the large language models. I don't care which one you use. Pick one. Use it. Get used to it. My favorite way to use it, buy bourbon with
it. Tim, cover your ears.
No, in all seriousness, right? The bourbon market has exploded a lot like the insurance industry, to where, you used to be able to go out and spend 50, 60 bucks and you have a great bottle of bourbon. Now to get a great bottle of bourbon, you're looking at $70, $80, $100 to get a great bottle of bourbon. And so when you make a mistake in buying one and you get it and you go, I don't like this, it's more expensive. And so for me, I have a project that is in my chat GPT. That's the one I use. It's not the right one, but it's the one I use. And I put in a list of bourbons that I like. I put why I liked them. I put in approximate cost of those bottles. And now when I go to buy a new bottle of bourbon, my once a quarter treat to go, let's get a nice bottle of bourbon. I go and I open up my chat GPT and say, hey, tell me about this one. And it knows what I like already. And it says, hey, you might like this because it's similar to these. Be careful with these tasting notes. You may not like it. I haven't made a mistake since I've started using chat GPT to buy bourbon. I haven't made $100 mistake on buying a bottle of bourbon.
So in other words, we're currently using the Terminator to purchase your drinks because it now knows your preferences.
Absolutely. It's the
No
Borg.
red flags there, Chris.
No, it's the Borg. It is. I'll go Trekkie with you. I'll go Borg.
Oh,
It is the hive mind. But for tradespeople out there, find something that attracts you to it. I don't like making $100 mistakes on bourbon. Sure. In fact, then I've got, a bunch of drinks that are crappy.
Yeah, but that's when we get those, we just put them in the mail and we send them to Tackett and say, here you go. Hey, really enjoyed your HR seminar this month. Here's a crappy bottle of bourbon.
So for me, it's kept me from making probably at this point $400 or $500 mistakes on bourbon. I've had good bourbon since then.
So before I get all weirded out with your love of the Terminator, let's pivot again here and go back to your background. You independent adjuster, you spent time working for one of the programs, you did a lot of time reviewing estimates. What do you view as the biggest differences between the way a contractor looks at that estimate and the way an adjuster is trained to look at that estimate?
Contractors for a long time have taken pride in the actual work product of an estimate. At the end of the day, the line items on that estimate do not matter. The final bottom dollar amount, and if you can perform the work that you're saying you'll perform for that final bottom dollar amount, still take care of your stakeholder, which is the company, that matters. And so contractors for a long time have looked at it and said, I want to be right. I want to make sure I put the right product down. The game's changed since then. The reviewers simply look at it as, do I think it should cost this? Does the bottom dollar make sense? And if they can't make it make sense, and look, there's a big skill gap there between someone who is a restorer and someone who's an estimate reviewer. Big skill gap.
Yeah. Completely different level of training.
And so when you're looking at it, they're looking at it and saying, does this tell the story I need it to tell? And does it fall within the prices I normally see? And if the answer is no, then they start asking questions. And when as estimators, we get defensive and say, no, but I'm right. Sometimes being right doesn't matter. It's about the package around it. It's more sales than it is a technical aspect. And so knowing how those insurance people and reviewers are going to react is helpful. Now, you can take a few different stances here, right? You can say, I'm right and I know I'm right. I'm not going to interact with the people that are reviewing my estimate.
Yeah.
That's a fair way to do it.
See that
a fair way to do it.
Bill the homeowner and tell them pay it.
Now, can the homeowner pay you? We talked about that earlier.
Yeah. It's
becoming less likely that they can pay you. So we can bill the homeowner all day long, but we may end up with receivables that are 150, 200 days out there. I've seen it. Mm-hmm. And so with thinking about it from the other side of, are we talking about price or are we talking about scope? And thinking about the estimating and what that looks like. If we're talking about scope, I feel my opinion is that as restorers, we should talk about scope all day long. Stop, because I don't talk about price. Quite frankly, two different directions here. One, I'm a big advocate for custom price lists. And look, State Farm has one, Liberty Mutual has one, lots of other insurance companies have them. They're a little bit less than the rack rate of whatever price list you get from Xactimate. You should have one as well that suits your business. Primary way to do that, and look, at the end of the day, it's not magic, gang. It's about putting the time into it, figuring out what you've paid your employees to do that work, and then figuring out your burden and overhead for that employee, making sure that appropriate amount makes it into the estimate. I think Xactimate does a fair job at a number of things. It provides a basis for us to have a discussion. And so if we can have that discussion and not get into I've been doing this for 20 years, did you just start doing this yesterday, kind of discussions that often happen.
You don't advise that as the lead off on the summary of the estimate?
No.
All right.
But if we can remember that and really truly say the person, it's a negotiation at that point. Once we've submitted an invoice or an estimate, it's a negotiation. If we can truly say this person on the other side of the phone, the other side of the video, is just another person that is worried about getting home today, taking care of their kids, walking their dog, going to the doctor next week, taking care of the things that matter to them, and this job is a tool for them to get there. I think we can perform better and make more friends on the insurance side by having an open conversation and saying, hey, look, I've got these costs in it, and following a pattern. Every estimator needs to follow a pattern with questions. It's a negotiation. We're doing all the same things. We're trying to anchor. We're talking to people about what we need as a business and how we've negotiated this estimate or invoice. And there's a spot where we have to stop and say, hey, if there's nothing else we can talk about, if it's just price, insurance industry set most of that. I've determined my price for my employees. Yeah. There's nothing more to talk about other than scope. We're still going to have conversations. I have restorers all day long that tell me, Chris, I'm tired of having these conversations with insurance companies. Gang, we can't stop. We have to keep going. Otherwise, we end up in a managed repair system like the auto industry, like the medical industry, where we lose majority of the control of our pricing. We have to have the conversation.
Going back to your shameless picture above your head, your giant head in there with the founder and previous owner of Violand Management, Mr. Chuck Violand. I'm wondering what's next to that. Is that a baseball card?
This one here.
Is that a baseball card?
That is a baseball. It's actually an autographed card.
An autographed baseball card on your shelf of distinction. Is this Babe Ruth?
No. This is it's actually one of my favorite baseball cards that I own.
Okay.
It's from a catcher that played for the Intimidators. It's out in North Carolina. And it's a baseball player called Joey Gillikin.
Joey Gillikin. Boy, that name rings a bell. Although the word Joey does not ring a bell. That's what I'm absolutely loving about this baseball card.
He is actually a great restorer out of Oklahoma. He's a friend, a former client, and I think he's doing great things up there.
Bison restoration, and I don't hear him go by Joey as often anymore, but I do not have an autographed Joey Gillikin baseball card, so I will be going on eBay when this is over with and driving up the value of that card by making a ridiculous bid.
You know, Jeff, I have one that I can ship to you for the low price of $99.
I just got the brand new Violand company corporate card today, so I got a lot of room on my credit. Now, if you ever do see Joe at I know he goes to the RIA show. I know he goes to. I'll see him at Access. I cannot remember if it's Tom Glavine or John Smoltz, but he faced, because he ended up being, I think he made it up to Double-A in the White Sox organization, and he faced one of them. But he was batting, and the guy was down there in Double-A doing a rehab assignment. He only saw 3 pitches, so you can imagine how it went. And I'm not going to steal his story, but it is one of the all-time great baseball stories that I ever heard. But imagine getting on the mound and having a guy, or getting in the batter's box and having a guy like, Tom Glavine, John Smoltz on the mound, even in a rehab assignment. Just humbling.
Blow them by you. Yeah.
humbling who and what you feel you're going to be able to do. And I think that speaks volume of the world that we live in the restoration industry, in the plumbing industry, is every day you get up and you're going to be the next Babe Ruth. And I'll be damned, John Smoltz is standing on the mound and he wants to get through this rehab and get back to Atlanta.
Just another person across from you doing their job.
Just another person doing the job. Can't take it personal. Well, Chris, I want to appreciate your time. I thank you. I appreciate everybody's time listening to this podcast. I'm Jeff Jones, the Director of Sales and Marketing here at Violand. Chris McQueen, our business development advisor. And Chris, I will let you have the last word on our way out.
Yeah, gang, thanks for listening. Have fun in restoration this year and change the world.
Thanks, everybody. We'll see you next time.